Suan, haven't seen you for a long time. Suan Long, good to see you.
Hi, Frank. Very good to catch up with you and see a lot of familiar face here.
Thank you.
Okay, great. Everyone can see my screen. Oops.
Yeah,
Can
we're
everyone see
good.
my screen?
Yeah, go ahead.
Great, great. Well, welcome to today's webinar hosted by R42 and AlgoDynamix. It's a special edition today. Markets or Mania. Very exciting. So today's agenda. So we'll have informal discussions with the doctors of R42, namely Dr. Jeremy Sosabowski, who is the R42 Senior Fellow and also AlgoDynamix CEO and co-founder, Professor Frank Sortino, who is also R42 Senior Fellow and advisor, and then Professor Ronjon Nag, who is the founder of R42. This is an informal discussion. This is not a stock advice. This is just for, information and will be intellectually stimulating and entertaining, I'm sure. We'll talk about AI, tariffs, markets, and also letters from Silicon Valley. Who are the hosts? So Dr. Ronjon Nag, who is the founder of R42, adjunct professor at a School of Genetics at Stanford Medicine School, teaching various AI courses, genes, ethics, longevity science, and healthcare venture capital, serial entrepreneur, inventor, a true pioneer of AI. He's been working in AI for the last 40 years, awarded multiple awards, namely the last one was, not the last one, but the 2024 Silicon Valley Engineering Hall of Fame, and founder and advisor and investor of many, many companies in AI and longevity now. And myself, I'm a principal at R42, been at R42 from day one, doing fund management, evaluating companies in longevity and AI. I'm managing R42 Institute. Zishan An, he's the venture associate at R42, doing operations, fund management, corporate assistance. And then AlgoDynamix, they're based in Cambridge, UK. They are basically they're AI for trading, but you'll hear more from Dr. Jeremy Sosabowski as well. Who is R42? We're a venture fund. First of all, we do first checks. We have over 100 deep science and technology investments. We also have a quant fund with AlgoDynamix, so R42 AlgoDynamix Fund. Then we also have an institute where we have fellowship program, focusing on AI and longevity, founders program, and various events like R42 series, which is also, that's part of that. R42 comes from the Hitchhiker's Guide from Galaxy. Many of you know about us already here. And then just a couple of things, we have upcoming courses. So these are courses taught by Dr. Ronjon Nag. So the one that's on April 21st, that's online and on campus at Stanford, crash course in AI, anybody can attend. And then the following one is April 29. It's online only, 6 weeks, and it's Live Longer, Live Better, Exploring the Science of Aging. And anybody can register for those courses. We'll also follow up in an email with the links too. And as I mentioned, we have a fellowship. This will be cohort 8, mostly for students, but also for professionals as well. It's an amazing program. It's all online, it's free, and our fellows have gone on to do amazing things with, from building companies with 8-figure profits to joining big companies, to doing some, new exciting things. So those are the projects for the summer. We're interviewing now, so feel free to apply. We also have a longevity club, which is basically a citizen science community for our members who basically share. We share the products and offers from various longevity companies. Some of them are our portfolio companies. And then we do the tests together, and then we can share the data and discuss. The membership is free for now. Currently, we have 3 offers. They're on the website: the brain aging test, the metabolomics test, and also supplements. So today's speakers, so we have Professor Ronjon Nag, who is the founder of R42. He's also executive board member of CAP AI. Oops. And then Professor Frank Sortino. He's the founder of the Pension Research Institute, emeritus professor at San Francisco State University. He invented the Sortino Ratio, a widely used measure of risk of stock portfolios. So very exciting. And he worked with many professors internationally to create the most postmodern portfolio theory. And then Dr. Jeremy Sosabowski, co-founder and CEO of AlgoDynamix, an AI-based financial price forecasting analytics company. Okay, that's it. Great. Well, I'll stop sharing. And as I said, this will be very entertaining, very intellectually stimulating. This is not stock advice. We're not doing any slides. We're just having a conversation with the three doctors of R42. And feel free to ask questions. Feel free to type in the chat and also chat amongst yourselves and comment in the chat. Yeah, this will be a very exciting discussion. So, and happy to see that the markets are kind of back on track. But, you know, my question is to start, let's start with what is the state of the markets now?
Right, the state of the markets. Well, I think, so we got hit with his tariffs back and forth. There's an old phrase that the markets can stay irrational more than you can stay solvent. I'm actually a big believer of rationality. I think eventually things do get rational. Unfortunately, you might be bankrupt on the way, waiting for that. And I think there's a comparison here with Brexit. So Brexit happened, and then after Brexit, everything fell apart. And then, but then what happened is almost like industry by industry. I think there's still many industries to go. So, oh, we need to sell to Europe, and they'd say, well, you can't sell to Europe because you haven't met the standards. Well, let's actually just have a carve out just for your industry and make sure that you can have standards for those. And oh, let's just use the European one. So almost piece by piece. What I'm seeing in Britain, Jeremy might be able to comment, is they're like replicating the EU components industry by industry. So almost it will get back to pre-Brexit. The only problem is there's some things that don't change, like cross-border travel and immigration and ability to work and all those things. And I think that's what we're seeing in the tariffs. Everything's thrown up in the air and said, "Oh, okay, no, Lesotho, you're okay. We'll let you off because you can't afford to buy American goods. iPhones, you can those can be zero, or actually, I guess still 20%. We'll let you off. So almost like industry by industry. How long will that take? I don't know. But it seems like that's a similar analogy that I'm seeing. So I'm probably a little bit more optimistic than a lot of people. But let's listen to my colleagues, Frank and Jeremy, what they've got to say to that opening gambit.
Frank, can I leave it to you because you've probably seen a bit more than I have, Frank? Is that okay if you take the word?
Well, there's no shortage of people who are giving advice on what to do about all the Trump policies, in particular tariffs. I know you heard a lot of it. It so happens that yesterday there was an interesting debate on this subject on Fareed Zakaria's program. Any of you see that debate with Larry Summers? Raise a hand.
Type it in the
Right.
chat.
Well, I watched it twice because I was thinking about this talk today with you. And here was Fareed Zakaria having Larry Summers on. Larry Summers is not an ordinary man. At age of 16, he was admitted to MIT. And he wanted to study physics like Jeremy, but then took up economics like his mother and father, both professors in economics, and became, of course, a professor, PhD in economics, and then treasurer of the United States. I mean, all of his accolades. And he was debating Oren something or other. Even Fareed Zakaria couldn't remember the person's last name at the end of the program. So here we had this extremely talented and experienced and highly recognized old man against this young man who was given the accolades of being the spokesperson now for all the Trump policies, because he supported them all. So Fareed started out by listing 9 different things that had happened in the 3 months since Trump took over, and said, now, Oren, his name is Oren Cass, how do you defend those things? Well, this young man started his defense, and Fareed interrupted him to say something, and the man said, wait a minute, you gave me all of them. I listened to you, and now you ought to listen to me complete what I want to say about this. He took charge and gave his little spiel, and then Fareed said, okay, Larry, what do you have to say about that? Larry Summers went on for 5 minutes or so, fact after fact after fact after why this young man was wrong on every point except one, that the stock market is not a predictor or tell you what's really going on in the economy. If you made your judgment on this of who was the most assured, the most interesting look and taking charge, it would be Oren Cass. Credentials, he has none. Let me see. I looked him up to see who is this person. Well, he studied political economics, not econometrics, not an economics major, political economics, whatever that is, at Williams College. So I looked up Williams College, and it said, a Williams College education is the essence of cross-disciplinary study, developing your ability to think critically and creatively and to create knowledge. Wow, create knowledge. I could have saved a lot of time than all the trying to get a PhD in finance, and I could have turned out to be just creatively understand what's going on in the world. So what impressed me here was that the way that we elected Trump was by his appearance, how he looked, what he said, and his age was against him, but at least he was younger than Biden. So is that the way we should make decisions? How do I go about deciding? I'm not an expert in economics. I'm a finance professor, not an economics professor. I did take a number of econometrics courses and a lot of economics courses in monetary theory, but I would not present myself as an expert in economics. So who would I turn to? Well, certainly I respect Larry Summers. I don't agree with his assumptions of Keynesian economics. I'm a monetarist, but the people that I respect are Dr. Roach Stevenson at Yale, and he wrote a book, Accidental Conflict. And what he had to say in that book, you ought to read it. And that will give you the best understanding of how we came to have these tariffs. And it's all about money that we spent and that we didn't have. It's the debt problem that we have that is the cause of all this. And if you don't understand how the budget deficits turned into trade deficits, turned into an excuse to say it's your fault for putting America in this position, the problem here is the world has taken advantage of America. Well, he gives a different point of view, and it happens to coincide with my point of view. There's another person who has spoken to this issue more recently, and he is the dean of the Queen's College at Cambridge, and it's Mohammed El Arian. He wrote a book last year entitled Permacrisis. We are in a stage of permanent crises, one after the other. And Larry Summers had this to say. He has never seen anything like this before. You can't go back to say, well, this is like 1929, or this is like 1980. This is like nothing else Larry Summers has seen before. And I concur with that. This is like nothing else I've ever seen in my 120 years in this business. Seems like 120 years. So in all of my experiences, I can't say that there's anything that I learned that gives me great confidence in what the hell's going on in the world. So,
so let's see. So I'm a tech guy, right? So we've got the
yeah.
physicist, the tech guy, and the economist, right? And tech, we what's common, there's a concept known as disruption, and it's quite common that the outsider often is the disruptor versus the insider. And so often people who are the incumbents are disrupted by people outside their industry. And of course, is it this time it's different in that are we sitting in a revolution in technology, in AI, in but associated risks as well? But that's one of the comments I have to make. I come with you, Frank, but my issue is trying to understand what the other side's trying to think. Say, well, just because the existing people, well, we're not particularly optimum with the current theories and of how things are going. Jenny, why don't we try something else? But maybe Jeremy can comment on these ideas, and we can chit chat and
On chit
what
chat.
we think.
I'm the humble outsider, sort of dialing in from little
We're all
Cambridge.
outside. We're all outside.
We're all outsiders. We're all outsiders. Cambridge,
We've got
UK.
Europe
So,
and the US, Europe and Silicon Valley.
I think your Brexit analogy was quite good, actually, Ronjon. It was, sort of possibly sort of over threatened, over risked, over scared, and then eventually, the humanity caught up and rationality caught up. And I'm sort of seeing the same, well, various flavors in the US, actually, where, Apple got their exemptions and other people are getting their exemptions. I'm generally quite optimistic. Frank, since you've been around for 120 years, I'm going to give you a quote from Winston Churchill, allegedly, and I'm just reading it now. So, Americans can always be trusted to do the right things once all other possibilities have been exhausted. So once all other possibilities have been exhausted, I'm sure the Americans will do the right thing. So that's my sort of opening gambit. That it feels suboptimal, Frank. I think a lot of people might agree on that one, but it's not the final state. I think that's my sort of opening line on that one. So wait and see. That's my sort of agreement. So
I disagree
got
with that wait and see.
okay.
I'm afraid if we wait and see, it's going to be an awful sight.
Interesting. Yes. Let's. Okay.
But what do you think of the markets? Are we in a market or a mania, Jeremy?
Once again, since I'm running AlgoDynamix, we provide the forecasting. We are in a behavioral state, Ronjon. So there's difficult to tie it back to fundamentals because the fundamentals are not known because they're changing every week essentially. So we are in a bit of a irrational mania state, and realistically, I guess just doing a bit of a slight sales pitch here. That's where the money's made or lost essentially. I think people panicking, people selling at the bottom. It's a sort of sad state of affair, but that's not the time to sell, is it, at the bottom, which I suspect some people have done in the past. So that's on that one. So everybody's agreeing here. Frank, any thoughts about where how reflective the stock market of the current situation? I guess that was Ronjon's question. Yes.
Well, how do you analyze something that never happened before? If you agree that this has never happened, and this multitude of interesting decisions that the president has made in these past 3 months, the ramifications of that, how do you go about analyzing that? Well, each of us has, in different ways, dealt with managing uncertainty. Me managing the uncertainty in financial markets, Jeremy, you with the way the world was put together, and 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 as an engineering point. So we have different ways of managing that. For me, it's constructing some probability distribution. What does the uncertainty look like? I've been taught that if you can't describe it, then how are you going to manage it? So try in some way to describe that uncertainty, and then the assets and the things that you're dealing with in that uncertainty. How does engineering differ from that, Ronjon?
Yeah, so engineering, we're pragmatists. We're pragmatists. We deal with we invent new things. Secondly, though, we invent new things not in theory but applied. That's probably the difference between us and scientists, though engineers are scientists as well. So they need to know science, they need to know mathematics, but we're also trying to find solutions to problems. Um, Jeremy's a physicist, so he's more of a scientist, but trying to think about, okay, what can we do with the tools we have? And looking at engineering economics, of course, many economists were engineers or physicists or scientists. So, okay, what tools do we have to make life better? And can we make life better for everyone, or is it a zero-sum game? In other words, you can't physically make life better for everyone. Someone has to lose. And I think maybe that's the current Trump philosophy. Someone does have to lose, and if it's going to be someone's going to lose, it doesn't have to, he wants to make sure it's not us. Instead of the other view is making the pie bigger. These are what the Canadians say, right? If we make the pie bigger, and the Europeans say, make the pie bigger, we all benefit. So I'm in a sort of quandary. I don't know the answer. By the way, I'm the first person to say I don't know the answer. But it just doesn't feel right. People always say businesses want predictability. So even if it's wrong, well, at least we know what it is. Is there going to be a tariff or no tariff? But that's what I that's what I think.
Oh, that's great. Yeah. Ranjan, a question for you actually. So, speaking of which, what about AI? Is it making the economy different this time? And I know you're now on the board of CAP AI, so that's very exciting. Could you share more about it? What are you doing in CAP AI? What is it about?
All right, AI. I think other than tariffs, which I think AI actually trumps tariffs actually, is that AI literally there's a thing that drops pretty much every day about AI. So AI is in the news every single day. As some of you might know, I work in longevity as well, and people say longevity's hot. No, it's nothing like AI. AI is every single day. I think the course we have 300 to 500 students every quarter. I think I taught 2,000 people. And about a year and a half, 2 years ago, well, GPT came around 2019 or so, but it really dropped to 23 when it was really the user interface was really useful. Now everybody uses GPT and its competitors, Cloud and the like. And people say this is an inflection point. But I actually think the inflection point was probably a few months ago, about 6 months ago, when something called vibe coding popped up. I'm not sure if anyone knows what vibe coding is. This is where you simply, right now, there's probably 100 million people in the world who can code. Right now, that's going to change to 1 billion people because the most popular coding language is not C, it's not Python, it's English. And right now, these vibe coding platforms, all right, then I've been playing with it for the last few months, revolutionizing how work is done and how products are developed. Um, you can build, everyone's heard of YouTube, right? You can build YouTube in 30 minutes now. Reid Hoffman, the founder of LinkedIn, over the weekend, not this week, I think 2 weekends ago, he rebuilt LinkedIn in 45 minutes. where you just simply say to the platform, please build me a site that can upload videos and download them and view them, and it builds it. So people have to think differently, and I think that's a major shock to the economy on both sides. All of a sudden, engineers are now not the bottleneck. It used to be, I think a couple of weeks ago, the software engineering vacancies in Silicon Valley, for the first time in history, dropped. Organizations are saying do anything with AI. The Shopify CEO said every job opening has to be justified. Is it going to be that if it cannot be done with AI, then you can be hired? Otherwise, it's AI. So all of a sudden, you've got this concept of a single person unicorn. Sam Altman talked about a unicorn company about a year and a half ago, which only has one employee. I think I was quite skeptical at that time. I actually now think it's possible. Maybe it's not just one, but certainly, the number of people you can pack into a conference room. I think that shock's waiting to hit the economy. That hasn't actually arrived yet. So it's a plus and a minus. It might be just in time where, maybe the funding dries up. Maybe you don't need as much funding. You can just do. I mean, on my first company, I built with Lexicus. I think we raised 500 for the company. That's $500. $500, not $500,000. And there was 3 people at our peak. That was like 30 years ago. I think we can build so much more now. And it's possible for Jeremy, you to build a company, Frank, you to build a company, Anastasia, you to build a company, each of ourselves, and without writing a single line of code. So I think that's going to be a shock to the economy. It hasn't quite rippled through yet. And yeah, I just got put on the board of Cap AI. I think basically that's what we're trying to do. Is like instead of spending boatloads of money on things, and particularly in AI, you heard about people. I think OpenAI has just raised 40 billion. I think it's going to be the other way around. I think there's going to be some WeWork situations where excellent companies, we can debate whether WeWork was an excellent company, models sound like a good product, but the economics doesn't work. OpenAI is losing $5 billion a year. And it could be like the infrastructure players, they did okay, Cisco and Oracle in the internet days. But going forward, it was the white space companies, eBay, Amazon, that really made out, Salesforce. So I think we're just beginning to see that on the economies. But let's see, what do my 2 colleagues think about that? Is that a sort of shock? And how do shocks work in economics?
Jeremy?
I've got just one point actually on the previous topic, and then I'll definitely on the AI side. I think the right tools for the current economic situation is, yes, I would say running a behavioral forecasting company. I think game theory and poker might be a better set of mathematics to use for the current short-term situations. I think that's my sort of comment on, what tools should we currently be using. I think on the AI side, yeah, I mean, Ronjon, Frank is as optimistic as always about this whole space. If it results in, productivity increases and everything else, absolutely exciting times. Obviously, the route to market, Ronjon, the distribution, the marketing, that's still, there's still going to be a supply chain there, maybe different type of supply chain, and I can see that happening. So we're going yet one level higher up in the abstraction, but it's still a whole company to build. Yes,
the productivity could be 20x, not just 2x.
20x, interesting.
I mean, obviously, these things that have popped up, they're like prototypes, someone said in the chat, but that's just today. I mean, look, there's amazing things. If you play it forward, maybe the whole thing is built, and you're kind of seeing that, people can be shocked. You could argue that Siri and Alexa had a 15-year head start and lost it in like a year. Skype had a 20-year head start and lost it in 6 months during the pandemic. Right.
So it's the better play from a investment. So is the shovels and picks, is that the better play then, Ronjon, in terms of hardware?
No,
I'm trying to think what's the value chain. What's the value chain? Yes.
Well, I think it's shovels and picks. I think it's the applications.
The applications, yeah.
Yeah. So we've gone past the shovels and picks have been built. Now the next stage is using them. and the like. But okay, so what do we, I mean, that's what I think certainly at Cap AI, that's what we're trying to do is that instead of that you can be much more capital efficient. And maybe that's the difference now. Maybe there's going to be less money to go around because of uncertainty, but maybe you need less money. It's
One thing that AI would bring to this conversation is objectivity. We humans can't avoid the emotions of the time and the things that make up our view of life. But AI can, and so it brings that to the scene. And I certainly need a robot or an avatar to help me be more objective in my views on the market. I don't know that Oren Cass is wrong. There isn't any knowing in my world. I live in a world of uncertainty. No one knows what's going to happen in the financial markets. And it's dealing with that uncertainty that I think AI could do a better job than myself.
right. So the Fed Reserve should be run by AI. Actually, should governments be run by AI or even organizations? I think I saw an application because that basically reads the email of the entire organization and you can just ask the AI,
At
well,
least be
what do we do?
consulted by AI.
So how do we get so and so as a customer? Well, so and so's got, this is a company we're involved in, the Intra High, where they're not reading all the email of it, but they know who knows who in any organization. So oh, we need to get the CEO of General Electric. Oh well, okay, we've got a person who works as a junior programmer. His uncle is as vice president at General Electric, and he knows the CEO, and that's how the best way. Instead of asking your sales VP, things are just going to get more efficient and trying to
Efficiency.
get these things. But the other dynamic is the upcoming population crisis. Um, the birth replacement in South Korea is 0.72. Ideally, you should have 2.1, replace your parents in a little bit. China, it's one. It's one. In the US, it's 1.6. And if you play that forward, there isn't anyone to do the work. So my question is, will machines be here in time to do enough work to replace humans who are not doing any work, who've become old and not doing anything anymore?
I
Comment?
think I'll take it briefly, but Frank, I think you've seen more once again. I think we've had this conversation every generation, Ronjon, about technology is going to take away our jobs and we're going to have, much more productivity and we're going to have more leisurely time. I haven't seen it happening this time either, actually. So I don't think it's different this time, Ronjon. I think
It's
we
not
will
this.
find other things to do.
Well, the famous one is the Club of Rome in the 1960s, who said we'd basically in 1980 have an apocalypse and there won't be enough any food or any energy. And what they
Mm,
forgot to take into effect was the efficiency gains of productivity in
yes.
technology. Um, but the question, this is a little bit different. This is sort of like, no, will we actually have any people, right? Because if we're not replacing people, China used to have stop. It used to be people were saying we're going to be overpopulated. I think the 2050 era, which is not that long from here, we're going to be underpopulated.
I suspect there'll be another surprise, probably in with your longevity hat on, Ronjon. You might surprise us again about we're all going to reach 120 actually quite easily. I don't know. It's difficult, sort of what's the thing about predicting the future
I'm on
is
my
difficult,
way.
especially now, Frank. You've got another 120 years. You'll be fine actually. But difficult questions. Difficult questions. I don't. Frank, give us some insights, please. I think we definitely
Oh yes.
need you
Well,
here.
at the young age of 93, I'm just a long way from 120. Um, um, I don't know that I have anything really of importance to say on that. I wonder what some of you have to say. I see your faces all looking like you have some opinions of what we've been saying. Can we get any feel for that, Ron John?
Yes, excellent. So we can use the protocol. We can look through the chat a bit with questions we like to answer, or you can jump the queue and just use the raise hands function. and we
Yeah, to the ones who, oh, sorry, to the ones who verbalize the questions. So you can raise the hand or just verbalize them, and then otherwise we pick out questions from the chat.
Yes, otherwise we just entertain each other. Oh, well, I mean, while we're waiting for someone to do that. Okay, fine. Let's. Oh, Melissa's got a question. Great, off you go.
Hang on, sorry. I'm sick. Somebody just called me. Bad time. Okay, so sorry, I apologize for that. And thank you. I think, Ronjon, as people live longer, they'll have, I know somebody said there are already multiple careers, but you'll have more than one career, or you'll have two big careers. And I think things will get automated, certainly by AI. And then, yeah, we'll just have multiple careers. It won't be uncommon for someone to do two really big things or something like that. I mean, look at you, Ronjon. You're in how many what's your career?
Well, they all sort of. Well, I probably never had a career. No one will employ me for more than a couple of years at a time. But it's but yeah, I think it's glass ceiling. I've always wanted to get around the glass ceiling, right? So then that ends up doing your own thing, really, in the end. But as you know, Melissa, I'm a big fan. There's about 10 universities in the country and a few around the world that basically say people need to get re-educated in their 50s and 60s, because if you're going to live to 100, you're not retiring anymore. Economically, it might be impossible to retire. And so why don't you go back to university and get re-educated? So I did that about 10 years ago. And I know you're looking at it, Melissa. And so and it gives you another burst of life, and you're surrounded by young people
Yeah.
Okay, let's see.
And you get to mentor people.
Yes, that's right. I've got some other people. Josephine, go ahead.
Hello. Yes. So I was the person who responded by saying, we already have multiple careers. We've been doing that for a long time. As a matter of fact, I myself am a continual learner, and I've been in your class, Ronjon, and I have been spent my entire career in the tech industry. I even went back and did a bioscience when we had like the Great Recession. So always learning, always trying to keep abreast of what's going on now. But one of the things I want to say is this. I put it in the chat that I just literally got back this weekend from TED 2025, where people are still talking about AI. Last year, I was there also. There was more AI talk last year than this year. There's even an AI conference that happens in San Francisco in August from TED. TED has a TED AI here, as well as in Europe and Vienna. But Sam Altman was actually on program, and he was interviewed on Friday morning on the last session. And he was talking about how there is astronomical growth going on in OpenAI, so much so that they're struggling to keep up because of the amount of energy required and the amount of servers and hardware required, and they're just trying to keep pace, but that they're doing really, really great. That aside, all of the discussions that are happening on the sideline, and I just want to share it here. AI is not the magic pill. And so there are people on both sides, and I'm going to throw out a name, Tristan Harris. Tristan Harris was also in program. Tristan was giving, and he's here in the Bay Area. He was giving pros and cons and just warning people to be aware of possibilities as well as the many, many ways it can go left. And so people having debates and conversations about all of the things that it can likely do in the magic pill and, just, being this oasis, and talking about agentic AI and realizing that we're a long, long, long ways from agentic. And I'd like to throw out teacher versus master, or excuse me, the student versus teacher. Can the student become greater than the teacher or the master? We're thinking that AI is going to do all of these great things, that it's going to be much better than us. But it's what you put in is going to affect what comes out. So I'm not sure why people are expecting a magic pill. And I'll pause because I've said a lot.
No, I think certainly. Well, the way I look at it is, AI in a few years from now will be like the internet. You don't talk about internet companies anymore, but in internet days in 2020, they talk about internet companies. And I was like, oh, well, I'm an AI company. Well, of course, everyone's using AI. Coffee shops using AI. But can the student be cleverer than the teacher? Sometimes when young people ask me for career advice, I actually say to them, actually, you're probably more in touch than I am, right? In what are you actually using? As a grown up, you hear people are addicted to screens, and they're going to spend no, 93% of their spare time is on screens, etc. And is that a good thing? Is that any difference from watching television when we were younger? And but you're more in touch. When I told my parents I was doing a machine that could understand language, they didn't understand what I was talking about. But because I was in touch in that area, it could be this. So you can have the younger person, the person who knows less, to do more. Okay, let's see. Let's go to David.
Can I throw one thing out for everybody to think about?
Go ahead, Josie.
Okay, should or could or will AI be the driver or the co-pilot? And with that, I'll end.
Yeah, well, none of us know the entire answer. There's lots of sci-fi movies on where the AI is the driver, and the hitherto there are slave robots. There's other sci-fi movies on that, but let's see. David, why don't you go? Oh, he's put his hand down.
No, I just put it down because you'd already kind of asked me, Ronjon.
There you go.
And usually afterwards I otherwise forget. So trying to be proactive. So I thought I'd bring it back a little bit to the topic du jour, which wasn't AI. It was like, the markets and what's going on. And instead of the stock market, of course, people are talking a lot about the bond market. And what they're really talking about is, is there, sort of a loss of confidence in the U.S. And another way, I guess I'd broaden this out a little bit, which is, what to the extent there's a loss of confidence in the U.S., how big is that going to be and what's the impact there? And then separately is just all this uncertainty. In other words, on the one hand, there's a view of it'll sort itself out. The other is if you, just have, new item every day and constant uncertainty, how much impact does the paralysis have? And definitely seeing a lot of paralysis when I go talk to people. They're just not making decisions.
All right, let's have either Jeremy or Frank respond to that.
Well, just waiting for things to happen, and so it'll work itself out, is just not my style. I can't just sit by and let somebody beat up on me. I'll fight back, and my fighting back is to get the hell out of the market and wait and see, but keep my my money to myself. It was hard won, and I'm not going to give it all back because some foolhardy person is making stupid decisions.
Right, but our dollar is being reduced, right?
Right? Are you keeping it in dollars or gold?
Yeah.
I'm keeping it in T-bills.
All right, Jeremy. This is a good point, David. Markets or mania? Jeremy, are we in a market or mania? And what are we doing at AlgoDynamix?
I'm going to throw something completely unreasonable, Frank. You've been around once again. Default on T-bills, is that too outrageous or not? Or should I not even go there, actually? I'm bringing it up. Obviously, there is a sort of newer generation storage about this whole... Yes, Frank, any comments on that one first?
My expectation is that eventually inflation is going to raise its ugly head, and there's nothing to stop it. And we probably are going to have one of the worst inflationary periods the world has ever seen if things continue on the current path. And I will just roll over my T-bills at higher and higher and higher interest rates. If they go to 22%, I'll be earning 22% on my money. It won't be a big gain, but I will not have lost anything, and I will not go, into. So my downside risk is far and exceeds my upside potential.
So I'm a simple person, if tariffs are 145% on China, our biggest trading partner, and then even if you're not China, it's 20% or 10%, then isn't by definition all the prices are going to raise by 20%? And then by definition, isn't inflation going to be 20%? Aren't we heading to 20% inflation? Or am I being naive about that?
Are
might
you
counteract.
referring to the one-time shock? It's only a one-time shock.
It's not one time, it's 20%. I guess it's yes. The second year it's not 20 because you've got a flat 20%, but you'll have if all prices go up by 20%, let's say, then we're going to have a 20% inflation number in the next year or so, are we not?
Yes, and that is not just a one-time shock. Each year that you have to have 20% more to do
Well, it's
as
not
well.
20%. Well, it's 20%, then it's not 20% on the 20% after that. But then
If you, it does. I'm not talking about the inflation rate being 20%. Is if it costs me 20% more for a car, that's not 20% more for something that I have to buy every year.
yes, I know, but that's that's gonna be a short term. And then obviously the goods, I guess the idea is you're not going to buy goods from overseas. You're going to be, I think that's probably the administration saying that you won't buy goods from overseas. You're going to buy goods from locally, which don't have the tariff. But that's probably not practical. So you're heading towards that. And then because prices go up, revenues go up for companies. And isn't that good for the stock market if revenues go up?
There's a
Sure.
counteraction too about. Yes.
Will I plan on switching into equities at some point? Yes, I will. And will I be looking outside of America? Yes. I think that the rest of the world is going to come together faster than we do. I think we're going to be stuck in the mud for the next 4 years. But I think that China is being given a gift to surge ahead. And would people be giving up on America and turning toward China? Well, I will.
Well, I think we're still more creative than anyone else. Well, maybe I'm living from this bubble in Silicon Valley where we think we're cleverer than everyone else, and everyone says, the decline of Silicon Valley. Then next thing that pops up is, generative AI. It doesn't come from England. It doesn't come from Canada, even though they have excellent neural network people over there. It comes from here. Let's see. So, okay.
That's the way it was. Is that the way it will be?
That's the way it was.
I think so. I'm very optimistic about the US. Everyone actually, I think current administration seems to be very very pro crypto too. Actually, which is another one of my sort of alternative views, basically. So as long as US keeps on innovating, which they generally do, as long as US productivity increases, which it generally does, I think it will. Short term, a few shocks, Frank, but I think it's part of the journey. Let's put it that way. So that's.
So let's see, Jeremy. Equities, markets, or Mania? Are you equities or not equities?
I've been on my personal account, in addition to the R42. I've been buying equities. I've been buying US equities. Dips are very nice places to buy equities.
Not just any equities, US equities. Okay.
I've been sorry, US global. Sorry, combination of US
global.
and global.
Okay. All right, we're getting one or two more comments. Jonathan.
Yeah, oh, okay.
Jonathan Hill, that is. Yes, he's.
Hi, can you hear me? Okay.
Go ahead, Jonathan. Yeah.
Yeah. Okay. What a great forum you guys are setting up, and it's really appreciated that we can have this degree of interaction, both as interested parties in AI and tech generally, and I disclose an interest because I'm a reasonably substantial shareholder of Cap AI, and I'm a very happy shareholder of Cap AI, I can tell you. And welcome along, Ronjon. It's good to have you on the ride. My question is, obviously there's a big dislocate between US equity valuations, UK equity valuations. The NASDAQ and the S&P are always regarded as the panacea for equity offerings. The UK is going through the mill at the moment. I've heard it said that, you may as well list on the Kazakhstan stock exchange rather than the UK stock exchange at the moment. So could you just talk, Ronjon, about the difference and the degree to which AI is advanced in the US above and beyond that we're seeing in the UK? I'm a late adopter of AI, but I've been staggered by how quickly it's developed over the last 6 months in particular. Are you in the US 6 months ahead of where we are now, or 12 months, or 18 months? Perhaps you can just give us a bit of a commentary on that.
Technologically, we're a globalized world. And I've said this for many, many times. This is my little half joke. It's only a half joke about we think in Silicon Valley we're better than everyone else. The technology is available to anybody, anywhere in the world. The science, as soon as someone somewhere has a great idea, it's published almost the next day. What's different in Silicon Valley and maybe in the US is cultural. It's not that people are cleverer. It's people are talking about it. They're interacting. They're just bumping into people and interacting. The ideas are spontaneously happening, and that's probably what the advancement is. It's not so much the actual advantage, but the difference is actually narrowed. And we saw that with the deep drop from China. And I've been saying that for many years. What happens if you stop selling them chips? What happens if you don't have enough computing power? Well, people get cleverer. And they say, well, we don't need those chips, and we drop it. But guess what? Everyone's got DeepSeek on their laptops if they want it. The next day, they can actually do it. So it's not so much a behind thing across the world. It could be a peasant farmer in Bangladesh has access, if he's got the internet, to anything that anyone else has in the Silicon Valley. What he doesn't have access to is someone to talk to about the subject, and that's what the difference is, I think.
Yeah. Okay, well, thanks for that. So the next strand of my question is that you're a luminary in this space, and it's great to hear how your journey has brought you here. There must have been 1,000,001 special purpose acquisition companies that you could have monetized your expertise in, but you've chosen a small UK company.
Let's look about go back to the thing about valuations.
Yeah.
In the UK and the US and any other parts of the world, the valuations in Silicon Valley are usually 3 times higher than say in the UK. So 2 kids out of Stanford with an 8-page slide deck. Those of you who are angel investors, won't be surprised they'll be asking for $10 million valuation, just the white piece of paper.
Yeah.
In the UK, it's probably a third of that. As an investor, unfortunately, we try and get arbitrage that, right? So that some people go to London to shop at Harrods. I go to London to shop at startups, right? Because the technology and the science is just as good, but it's not Americanized. And so that's where I think these smaller markets, Britain speaks English, and I am British as well as American. That makes it more sensible to sort of look for a public listing. The problem with venture capital in the US, you can't get your money back for another 6 or 7 years. So trying to get liquid, experimenting with a liquid option in the public market is what we're doing there. Let's try and get to a couple of other questioners, and maybe Jeremy and Frank can comment. Jonathan Buckheit next.
Yeah. I just wanted to mention in response to your comment that during the last period of very high inflation in the United States, the 1970s, the stock market did not do very well.
Okay.
But of course, we had something called stagflation then. Frank, I'm sure, remembers this.
Oh, yes.
But it was very much a lost decade. And then my second comment, Frank, I know we had this out in the class. I suspect that you're doing a lot of trading within your IRA. And maybe I'm wrong. But if you are, then I think it's much less punitive to get in and out of the markets depending on where things are going than if you're in a taxable account. And those of us who trade a lot with taxable or have a lot of assets in taxable accounts have to be much more patient, I think, because paying 30 in California, 37% taxes on each capital gains move you make takes a bigger bite than the market fluctuations.
Excellent comments. Yes, definitely.
Taxes are a big factor.
But I enjoy paying taxes. That's the price of civilization.
Well, the price keeps getting higher and higher, right?
Yeah.
Okay.
That's right. Eventually. All right, let's see. Greg.
Yeah, so I had kind of two thoughts. Maybe one was maybe the lower birth rates are actually a good thing, because if AI's taking jobs and people are living longer, it could actually be that the lower birth rates are good, actually, don't you think? Possibly. And then my second question is, as a business person, what do you think about just treating the government like a business and having like people with MBAs running it? We do have that huge debt to pay off, and so so I don't know what
Jeremy,
your
why don't you haven't said much. Go ahead, Jeremy. You can take that one.
Can I just I'm definitely not a economics background, but I think the debt to GDP ratio, that's the real number. So it's not the 6 trillion or whatever they are, but it's that ratio. And as long as you keep it under control, well below Japan or the EU, I think there's definitely scope to do a bit of panicking there. But I think the other flip side, obviously, is make sure the productivity increases too. So that's how you keep the jet to GDP ratio roughly under control.
You're
So I
trying to
think
sort
that's
of
on that one.
match. If there's less people, but is there enough technology? If they're out of balance, that's the problem.
And I'm very, very bullish about. I agree with you too, Ronjon, that the US is somewhat overpriced. Just for disclosure, yeah. So we've taken some R42. I'm also an investor in Cap AI, so I've got to just get this out of the way from a compliance point of view. But I am actually very bullish about the US for numerous reasons that's just been stated. A few hiccups along the way, but I guess that's part of the journey. I'll put it out there. Actually, this is getting a bit political, but I'll maybe give the European perspective too. Actually, it's called democracy. If you wanted something else, then pick something else. There are different systems out there. It's a democratic process, and that's what it is. So
sometimes the democratic process vote. I mean, you've seen this in Latin America. They just want change. It's so corrupt, and they decide to say, "Well, okay, it's not very good, but let's just have something different." Okay, we've got 1 minute left, and so let's just summarize. Some Frank, Jeremy, and myself. Okay, Frank, market or mania? Are we in market? Is it the rat market? Mania. Okay.
I vote for mania.
Jeremy, market or mania? Oh, you're mute. You're mute, Jeremy. You're on mute, Jeremy. Oh, he doesn't realize. Okay, so I'll talk. You're on mute, Jeremy.
Is that mania? Definitely mania. Definitely mania.
Definitely mania. Okay,
mania.
I think I'm on mania too. We're in a basically a volatile time. Doesn't mean you can do rational, but I think the general message: be careful, isn't it? Be careful out there. So thank you very much for all joining us. We're trying to make this entertaining as well, and be free flowing and not be on walking on eggshells. So I think we all managed to do that, said what we think and said what we don't think, and I don't know the answers.
No, nor do I.
I don't think anyone else does too, but that's what the purpose of this conversation. So hopefully we'll interact in another one of these, or see you in one of the other events that AlgoDynamix runs. They have a lot of events, and R42 have a lot of events. I think our next one is the course, if anyone's interested, on Monday.
Thank you for tuning in.
Thank you for tuning in. Yes.
Yes.
Right.
Yes.
Bye-bye.
Bye, everybody. Bye.